And right now, folks, we're going to jump over to our man, Tim Ord. Folks, you can reach Tim every trading day at his website, ord-oracle.com. And then you can check out, of course, he's got a couple of great webinars right here at TFNN.com. You hit the services tab, and then you'll see the 6 secret ratios every trader should know. And we talk about some of those, as well as the secret science of market tops. Check those out as well. Tim Ord, good afternoon.
Good afternoon. Good afternoon. Actually, this first chart, we actually had a listener that emailed me that he wanted to take a look at the Russell 2000.
Perfect.
Basically, so I thought I'd cover it real quick before we start on the S&Ps and gold market. But anyhow, this chart is a monthly chart, goes back to 2018. And anyhow, we broke above that beginning of end of last year, couldn't hold it, fell back, went down to the previous highs. And if you notice, the volume really jumped up here. That's a sign of weakness off of a high. And that's usually a not good sign. So you compare the down volume off that high and what the volume do going against that decline. And if you notice here, you can see the volume is actually lighter. This is the down volume, or this is the up volume right now, as the market's been rallying here over the last 3 months, and it's not as high as the down volume.
Sure.
So you got weaker energy going to the upside, and so you broke the previous high. This high is back to 2024. You broke it here, couldn't hold that high, fell back down, got support at the previous highs of 2022. Now we're going to try to break back up. Well, this previous high of 2000, actually it's 2020, or 21. It's 2021. This high here is 2021. Anyhow, you broke above that high, couldn't hold it, and you fell below it. Now you're trying to rally above it. You actually got resistance right here, right now, on a monthly chart, and you don't have volume high enough to push through above this level. I'm not saying today's the exact high, but we're in the vicinity of the high. So if you don't have volume really pushing up at least equal compared to the down volume here, you're going to fail, and it's probably going to fail right around this 220 area, and you're going to go back down probably to the previous highs. And what happens there, don't know. If the decline is actually if the decline on volume wise, this is a monthly chart, is relatively light going down to there compared to the volume going up. You compare that to volume going down. If the volume's lighter than the up volume, then most likely you'll find support again right in this, looks like about 285 area. So I think the Russell 2000 is peaking in this vicinity, and but nothing really huge, probably back down to the previous low. And so we'll see how that works out. Actually, the previous low did break below it, but it didn't hold it. But anyhow, I'm looking for 185, probably between now and October or somewhere in there, because I think the S&Ps are kind of hitting a high here. But anyhow, that's that. So
I tell you what, would you mind refreshing maybe what you have your charts with Al, Tim? We have your charts. The right side was cut off a little bit on whatever you're sharing with him. I have the full charts if we need it. But for some reason, the right part of that chart that was showing that he has... Do we have it now? Let me see. I'm sorry. I'm checking it out. Yeah, for some reason... And it's okay if you don't. I have the full chart. All right, we can just keep going, and you can try it at the break. But I have the full charts up, and they can see it as well. So go for it.
All right. So we're going on to chart number 2?
Yes.
Are you handling it, or am I handling it?
Yeah. Well, we can see your charts, but it cuts off, unfortunately, about half of the chart to the right for some reason. That's all that's getting shared there. I don't know the settings. But I can see what you're doing. We can see what you're doing, but that's all. So I have my charts up, and the producer can take it from me, or, yeah.
All right. I showed this chart last Thursday, and the top window is the 10-day average of the ARMS index. Readings above 1.2 are bullish, readings below 0.9 are bearish. Last Thursday it was 0.88. Today we're 0.92. This is not exactly pull the trigger when that hits 0.9 or below, but it gives you in the vicinity of a top. And if you notice, if you look at all of those pink areas going back to May of last year, you're getting close to the top. And we had that close to the top, even though the market kind of bumped up here over the last several days. It's still bearish, so we're running into a top. What day is the exact top? Don't know.
Okay.
But we're pretty.
And I
close
tell you what,
to
we're gonna take a little break, just a couple of minutes early. We'll take the break instead of normally at about 39 past, and that way you can take a look at the charts. And we'll come back with Tim, folks. We'll finish up this conversation. We'll talk about the trend, and we got a lot more to talk about with Tim Ward. Don't go away. We'll be right back, folks. Welcome back, folks, and yeah, we got it figured out with our man Tim Ward, and we got markets selling off a bit as we took that break. S&P's now off 25 points at 63.98. All right, and I know we got everything going, Tim. I know you put those charts together and you like to annotate them and just kind of go over them, so that works out well. We can see everything now, so let's go for it, man.
All right, so do you want to go back to the Russell 2000, or we just
no? Because I had that one up. I think we were good there. Let's just go to the second chart. Yeah.
All right. Well, anyhow, the top window is 10-day trend. Last Thursday it was 0.88. 10-day trend above 1.2 is bullish, below 0.9 is bearish. On this chart, I noted in pink the times that it hit 0.9 or lower. And it kind of gets close. It gets you in the vicinity of the high. I'll put it that way. So I watch it pretty closely. And last week we get 0.88. We're right 0.92 right now, and we still pushed higher, even though the trend did hit below 0.2. I'm still looking for a pullback here. Excuse me. Here's I kind of presented this the other. This is kind of interesting. This is a weekly SPX. And this is a weekly SPX tilt ratio. We kind of covered that before. Usually the SPX tilt ratio leads the SPX. And if you notice, over the last 3 weeks, this ratio is actually trending down. It was actually bullish all the way up into recently here. Then finally turned bearish about 3 weeks ago, even though S&Ps have made higher highs. The ratio has basically made lower highs. So that's another sign. This is a weekly chart. So you got the ARMS index. Now you got the SPX tilt ratio. So have I got a short signal yet? No. Kind of waiting for volume to kick in. But I do got, if you have to be in the market, you actually have to be short. Because usually when I get two different indicators that are totally unrelated to each other, the chances for a top or a bottom are really high. So we're not going to screen through the summer going straight up here. At best, we'll go sideways, but I think we're going to here's what I think is probably going to happen. We're probably at a high in this vicinity, and I think we're probably going to go down and test the breakout area. We went through the February highs with the sinus strength. We had 245 million shares going through a previous high of 170 million shares. That's a break. That's a sinus strength through a previous high. And once you do that, that's usually 90% of the time it's a breakout to the upside. So I'm officially saying, yeah, we'd have broke out to the upside. Everything's bullish, but we're probably going to pull back over the next month or two and form probably a sideways market going in an October time frame, maybe a little bit before, maybe a little after, but probably this sideways movement that I'm calling for here is probably the B wave of an ABC up. In other words, B waves a lot of times mark the halfway point of the move up. If you do the statistics on that, it comes around 740, which is a big run up coming. So this is a consolidation just in an uptrend, not a top of any consequence other than a pullback to the February high. So that's how I see the S&Ps. Am I going to end up with a short signal in this vicinity? Hopefully I'll see it in the next several days. I'm no hurry to short because a lot of times these shorts, I don't know, at bottoms they ring a bell, at tops they don't. If just when you get everything kind of lined up for sell, the market manages to push higher. That could still happen here. So I'm kind of watching how volume is going to be this week. If volume's really light this week compared to last week, like 10% lighter, then I could end up with a sell signal on Friday. If it's not, I'll probably wait till next week. So that's kind of my trigger. Okay. I don't know how much time we got anyhow.
Yeah, we got plenty of time here because we took the break early, so we can keep going. But I was just going to say that, I mean, the TLT, And that's, I love the charts and the pullback because, yeah, that day on the TLT, we're up $1.41, man, which is a remarkable move today, up 1.6% today alone. And the VIX as well, right? We just went
Yeah.
from a 1470 to a 1607, which is quite a jump. I mean, we're down 23 points in the S&P right now, but we were only down like 15 points in the S&P, and the VIX had already climbed from 1470 to 1570, which is a decent climb when you only had the S&P down, what, 15 points? Yeah.
Yeah, actually, I got out a couple of weeks, actually mid-July, because the VIX was making higher lows. All of a sudden, it starts making lower lows. That's the trouble with tops. Sometimes they kind of go away as far as signals go. So that's why you're kind of extra careful. But anyhow, yeah, the VIX is starting to show some bearish signs here too. But this one on the weekly time frame, since I'm looking at the weeklies, is foretelling. Can it hold up another week or two? Maybe. But I think we're getting close. This is today. I don't think so, because normally these signals come at Friday on the close to make you sweat over the weekend. So that's that. Let's go to the gold market. And this is keep presenting this. This is the XAU monthly chart, RSI at 72. Over 72, marked all the times in the past going back to 1988. We really hadn't done anything since mid-April on the GDX. We hit, I think, around 53 on GDX in mid-April. We're still around that vicinity. It really just stopped going up, kind of going sideways. A lot of those gold stocks, however, did pretty well. Here's another chart presented this last Thursday. This one works pretty well. It's a very rare chart. You don't get very many. I mean, it looks like you get one every 2 years if you look at the time sequence between these signals. But when they form, they're usually pretty good. Last time we got one was 2022. Now we're in mid-2025. We got another one. It's a RSI of the inflation-deflation ratio on the weekly time frame. So it's a pretty rare signal, and we're getting one right now. Still expect a pullback on GDX.
Can I ask what that, because I'm just not familiar with even that, the inflation, deflation. So what would that mean to, in terms of where we are right now with that type of a spike, in terms of what it's showing for inflation or deflation, kind of?
Inflation's gone up too fast compared. Normally when everything's calm.
Okay.
Yeah, when everything's calm, this thing won't get a signal. But when inflation way outperforms deflation, in other words, inflation's going up too fast, that it just measures the ratio. So everything is like a stretched rubber band. Sure. The more you stretch it, the more it comes back at you, and it actually works on everything. That's why I use Bollinger Bands. It gets beyond the outer Bollinger Band too much, it's going to snap back to the mid Bollinger Band. This is just another one of those RSIs, kind of a stretch of the acceleration of the inflation-deflation ratio. It's gone up too fast, too quick in that time frame. And it works just as well. If you notice, you can pick out bottoms with this thing too. If it gets down below 30, it's kind of hard to line, but I picked out that low there. So it works the same way. But you put all that stuff on the chart, it gets too messy, you can't read it. So I just labeled all the highs, or the RSI got above 70. So it's not, to me, it's the big ones I think are going to correct, and that's the reason why I put a couple on these gold stocks. My opinion, the best way to pick a good gold stock is look on the monthly chart. You have to have a sign of strength through the mid Bollinger Band. I presented this last time, and it has to be a sign of strength. That's the reason why I put these circles around the volume here. It has to be a sign of strength going through the mid Bollinger Band. Then when you get 80% above the mid Bollinger Band, that particular run has run its place due for consolidation. Last time that happened came back here. If you notice, it's about 80% above the Bollinger Band. You consolidated for, several months before it took off again. Now you're back above the mid Bollinger Band. Here's some other times 80% above the Bollinger Band on this month back here in 2020. Happened again in, looks like, October, November of 2019. So it works pretty well. So this one, even though it's took a decent run up, it's due for consolidation because now you're above 80% above the Bollinger Band.
Sure.
Here's another one. This is I don't know. I'll do symbols, ABBRF. So now you're 100% above the Bollinger Bands, due for a consolidation. Started back in 2024, around, looks like about 25. You're up around 4 range right now. Last month it, above Bollinger Band, but you're only 25% higher. So I mean, it's not like running away from you. Also, you got the RSI up here. Here's one I think you ought to pay attention to. This is Dolly Varden Silver Corporation. It's a monthly chart. The symbol is DVS. I think I might have presented this one. Yeah, the only reason I'm pointing this out, this is because right here. This is a huge sign of strength. And if you notice, this stock haven't done anything since 2016.
Nice.
It's virtually, just gone no way. Matter of fact, here's the one. KMI is coming, another one. It went sideways for a number of years and finally broke out. Went from 17 to 30, or it looks like about 30 over the last several months. I think this one's going to go back up to around 8 here pretty quick. So
those are some remarkable stocks, man. The run up for sure. Silver having quite a run up, of course, with some of those equities. Tim, I appreciate the education, the time as always, man. We look forward to talking to you on Thursday, and have a great couple days.
All right, thank you. Talk to you then.
Thanks so much.
Thanks a lot.